Hi, I'm Keith McCullough. Welcome back. I'm here with Howard Penney, who's a senior partner at the firm who runs our restaurant vertical, to talk about something we talk about a lot throughout the day, which are what are the industry trends you're looking at from an analyst perspective, which Howard is the master of. And then let's dig into some stocks that we can play off of that type of a trend. And I'll warn you, this is not a good trend. So Howard, let's kind of get into that.
Sure, absolutely.
Let's just go to what's happening here from a restaurant sales perspective. To me this morning in our meeting, and we do this every morning, we have a morning meeting with the research team, and Howard came into the meeting and he said, look, these sales are horrible in terms of where we are from an industry perspective.
Yep.
Why?
So, well, a lot of reasons, right? I mean, first of all, the casual dining industry is in a secular decline. So there are less people going out to eat to some of these restaurants. Chipotle's, competition for them, other forms of dining is competition. But what we saw in December was a massive decline in sales, and part of that has to do with a calendar shift from November and Thanksgiving and whatnot. But sales were down, call it 3%, with traffic down, almost 5%.
Which is brutal. I mean, that traffic, when we're showing this chart here now for everyone to see, and we're showing same restaurant sales, that doesn't show traffic.
Right, which is even worse than that chart.
Now, most people would say, really? Really in this environment with the stock market at all-time highs, housing's up double digits, the economy's improving. Are you serious? Could that be the right number?
Well, I mean, this is one of the consequences of people staying home to shop on Amazon, right? Is you're not going out to eat anymore. You're not going to the Cheesecake Factory if you're not at the mall.
Well, is that basically one of the secular problems?
There's a lot of issues, I think, but clearly that's one of them. I mean, there's a lot of things that have happened this Christmas that are anomalies this year, and what we're seeing is just a fall off of sales.
And didn't a lot of these restaurants, so they're under Wall Street pressure to grow units, didn't a lot of these restaurant public companies force themselves into growing in off-mall and bolted on the mall? So shopping and patterns of people not shopping or shopping on Amazon actually does affect potentially their traffic?
Absolutely.
Okay.
It has to. I can't quantify that, but intuitively I think it has to have an impact.
Because this is a shocking chart. And again, we try not to shock you or scare you, but this is definitely one of those charts.
And keep in mind, the United States is frozen right now.
Yeah.
So January is not going to be any better.
Well, that's the other thing, to be fair. People are going to say, no, that's weather. And I would fully anticipate that every executive that's going to miss numbers, by the way, should use that, because that might sound like a good excuse, but you're saying, no, it's secular.
Right, and if you go look at that chart again, you can see this is, yes, December has fallen off, but the industry's been in a decline for 2 or 3 years. I mean, this is not, maybe there's been an anomaly with shopping and weather that caused December to be so bad. But we've seen traffic down for almost 2 years now.
Right.
So
this is
a
just
secular decline.
When traffic's down, it gets really bad.
Yeah.
Like this looks like nobody went.
Right.
Now, if you look at the next chart, this is basically showing how the stocks have done relative to the market. I mean, you who are watching this right now would say, Keith McCullough and Howard Penney, you are lying to me. Look at what the stocks are doing, and they're not doing what the traffic chart's doing.
Right. No, the stocks have had a phenomenal performance last year. I mean, up, 30%, 40%. The S&P up 25, 26%.
It beat the index.
I mean, it killed it. So, and arguably some of the companies are being run better, and they made numbers, to a certain degree because they were able to cut costs. Food costs are coming down, commodities are coming down. So, and consumer confidence did get a little bit better. So I think, domestic names like some of these restaurant names did really well, but, it's going to come home to roost here in the first quarter.
Yeah, this to me, Howard, looks like it looks like a macro chart. It's basically like U.S. consumer confidence rose last year. U.S. growth surprised on the upside. Exactly. I want some beta on that, so I want to own stocks that really capture that part of the U.S. economy. But these companies still have to report the numbers.
Correct.
Yeah. So if we kind of let's dig into that and kind of finish on that in terms of some ideas. I think the first one you wanted to go through is BLMN. Can you kind of remind people what that is now? It's a new.
So just one other. Let me just go back to the stock. So we wrote a note called the Casual Dining Bubble about a month ago, because these valuations are at historic levels.
I love that note.
Yeah, so I mean, the performance has led to some of these companies just being egregiously overvalued, and some companies coming public that might not have gotten through the normal sequence of events if it hadn't been a bull market for restaurant stocks. One of them being Potbelly, which I think we are going to get to.
Well, that's interesting because Potbelly, first before we go there, I mean, bubble, you're basically saying relative to the industry's peak multiples, it's at a peak and beyond peak?
Oh, beyond peak.
Beyond peak.
Yeah, I mean, 2008 was the last peak, and I think 8 times cash flow, 8 times enterprise value to cash flow was the peak. They're trading at 10 times now.
So typically when you have a bubble, what happens, bankers bring out, kind of mediocre type companies and they get a premium type valuation because they're being priced against a bubble. So you're saying that Potbelly would fit that profile?
Potbelly was one of the companies that got through the pipeline that might not have if it wasn't such a bull market for restaurants.
Well, it's not a new concept.
No, and they don't have anything differentiated.
Right, it's a sandwich shop.
One-day part. All they do is offer lunch.
So they have a sandwich shop. The other one, like I said, and I kind of tried to get ahead of you on this, but again,
Sorry.
A Bloomin' Onion is basically Outback Steakhouse.
Right, right.
Like, it's back. It used to be a different company.
Exactly.
But it's not a new
back
company.
and at a better multiple.
Right.
And it's the same company.
Yeah, I like eating there, but it's not a different company.
Right, exactly.
So they have a peak multiple?
They have a peak multiple.
Okay.
Yeah, but most importantly, they're one of the companies that set up expectations for a huge recovery in fourth quarter same-store sales.
Wow.
So they expect to go from down 50 basis points to up 2 on a consolidated basis. And as you go back to that first chart, as we saw in casual dining trends, it's unlikely that they're going to get there.
So this is how Howard got my attention in the morning meeting. He shows me the traffic and the sales charts, which are plummeting, and then he shows me a company that's promising an acceleration against the plummeting, which is basically Bloomin'.
Correct.
Okay, so that's a short.
Peak multiple.
That's a short. The Potbelly's a short. By the way, I love the name Potbelly. Like, it's just a,
right.
I just love that name. But the other one that we short.
Potbelly has a whole new meaning in Colorado too, by the way.
And in Canada, northern part of Canada, in the winter where you literally can't leave your house, which is probably why they don't have a cheesecake factory in Thunder Bay, Ontario. But that notwithstanding, the other thing I want to wrap up here. In real-time alerts today, we shorted Red Robin Gourmet Burgers,
Correct.
RRGB. Now, can you explain what they do?
It's a hamburger concept. It appeals to moms and kids, and they've done a fairly decent job at trying to appeal to millennials and the people that want to have a burger and a beer, and they've done a fairly decent job. But I think that story is almost over.
So if you want to go with your mom for a burger and a beer, but you're not allowed to have a beer, I mean, how does that? I mean, it's just not. It's a mall-based concept, isn't it? Because if you're going to have,
it's a mall-based concept that sells burgers.
Because if you're going to, I've seen their slide deck a lot of times. I mean, going back to my prior hedge fund life, and that's basically what it is. Exactly. It looks like the place that you go with your mom after you're done shopping.
Correct.
So
if you're 22, you don't want to be sitting next to a bunch of screaming kids eating a burger.
Or you and I would. That's for sure. And that stock is at a peak multiple too?
As well. Yep.
Wow. Yep. Okay, well that's a wrap. When you have the sales line slowing within a secular bearish formation, which is what Howard's talking about, and you have peak multiples, just FYI, your stock might have a problem. So again, that's when we start to short stocks. Howard Penney is definitely no stranger to making bear calls on stocks. And that's a fun one for me to walk through. So if you have any questions on that, I'm at Keith McCullough. That's my Twitter handle. You can find Howard at Hedgeye HWP, which are his initials. That's his Twitter handle as well. Thanks.